So what do you think about the IPO of DoorDash?
Hi, Angelica. Thank you for the opportunity. DoorDash IPO valuation seems very extreme to me. Looking at, if I look at the market value of this company, let's say if it is at $30 billion, they have to have 50% of the market share. And they are close to $65 billion as of a couple of minutes ago. That means they have more than 100% of the market share. So it is very difficult to justify this valuation based on the current numbers. So when I thought about this, why investors are willing to pay such a high premium for this company, this is what we call as the story stock. There's a story behind it, right? How Tony Xu came from China with his mother, worked in the kitchens, mother worked 3 jobs, and now today he's worth $2 billion, right? People like founder-run companies, because we have seen Elon Musk do with Tesla, we have seen Jeff Bezos do that with Amazon. So there is a thirst for founder-run companies. And also I have to give credit to Tony Xu. He's very effective with the cost management. So if you think about the cash burn ratio for DoorDash compared to Uber, it's lower. So cash management is good from Tony Xu's perspective. And another market stroke by the founder CEO is to focus on suburban United States rather than the city. Because the delivery companies like density, they like to serve 10 customers at the same time. But what they did not realize is the orders are for smaller amounts. If you deliver food to a home in suburb, it's a larger order and larger dollar values. So he focused on that, and that has served them really well.
Yeah.
Another thing you want to think about here is, although if you take the e-commerce market in delivery, the e-commerce in delivery, food delivery is only 10%. In the United States, the retail e-commerce delivery is about 15 to 20%. If you compare that to airline industry or travel industry, it's 50%. So there's room to grow in this space for this company. I'm not saying that they are going to be a $1 trillion company. So investors are betting on a larger market and a semi-permanent change in behavior by the customers and consumers in the United States post-COVID.
So you think that food delivery is here to stay?
Food delivery is here to stay. I am not willing to bet against customers or consumers going out to dine, but by the same token, the behavior has changed forever. Customers and consumers and households have realized the benefits of getting the delivery to their doorstep.
DoorDash has now 50% market share, and the valuation is 30 million plus. So the stock went up, like it went through the roof right after the opening. Is this justified in any way?
The valuation for DoorDash cannot be justified based on their current numbers. So if you think about DoorDash to have a $30 billion valuation, that means they have to have 50% of the market share. If they have to have 65 to 70 billion valuation, they are meant to have 120% of the market share, which is impossible. So based on their current market share, we cannot justify this valuation.
So what is it? Is it like a big bubble that's going to burst anytime soon?
It is not a bubble. It is overstretched valuation, but investors are paying a premium for what this company could be in the future rather than what is it today.
But if you say 120% market share, which is not possible, so how could it ever make sense?
So given the current market, it's meant to be 120%. But as the market grows, they will have a percentage of the market share much less than 100, but that'll grow into this valuation.
And in regards of the vaccines that are coming onto the market, like, okay, I understand food delivery is here to stay and behavioral changes, but if the vaccines are out there, if people are vaccinated, we have to think that food delivery will go down a little bit, of course. What about DoorDash and their price afterwards?
That will be a strong headwind once the vaccines are in place and consumers start going out, dining out. But as I previously mentioned, this behavior is a semi-permanent behavior change. Delivery is going to still continue. It cannot grow at the rate it's currently growing, but it has room in the future.
Okay, perfect. Thank you. One more question. Who is buying? Is this the younger crowd? Is this generation Robin Hood that is buying the share?
I call them the Robin Hooders. I think the retail interest is great. I was looking at the markets today. I looked at Tesla selling off, Zoom selling off, Zscaler selling off. Some of the high-flying stocks, I feel the money is coming out of those high-flying stocks. Maybe not entirely going into DoorDash, but a partial distribution into DoorDash, I believe.
But is it the younger crowd that is investing now into this?
It is younger crowd and retail investors, a great interest, because usually the IPOs open between 10:30 and 12. Today to open it opened at 1 p.m. That shows there were very high demand. They couldn't come to an open price, open bid for the stock.
Okay, perfect. Thank you so much.
Thank you.